What's up, guys? Mark Fleetwood back with the second of the double premiere on the Daily Grind Trader. Alright, guys, like I said, Binance, small account, have a trade to watch. This happened. I did this 2 days ago. Started this trade 2 days ago. Just sold out of it a couple hours ago. Not happy with where it ended up, but it could have been worse. I didn't hit my top, but it could have been worse. I'm going to get into it here. Alright, guys, on Binance, I always trade on the advanced market. Well, not the advanced market, but the advanced view, and going to the trading view. So I'm going to go into Mana, Decentraland, I believe is what it's called. And I am on 1 hour time frame in the trading view. Get this full screen, and I will show you what I was looking at and what I did. Alright, guys, so 2 days ago, I'm at work on a quick break, and I'm just scrolling through Binance looking for coins and tokens that have taken heavy losses. Come across this. This was 16% down. So I look at it quickly, and I really like using Fibonacci retracement. Fibonacci retracement is one of my favorite tools, and I'll show you why. So I come and I look and take my retracement here to my top, and I come across, and at 6 p.m. the 16th, is exactly the time I was looking at it. So at 6 p.m. on the 16th, I see that this candlestick here hit a hammer, hit the 61.8 or 618 line. That's a 61.8% retracement from the previous high, and then there was a green candle, a bullish candle on that. To me, that is a buy trigger. That is a trigger that things are going to go up. At the time that I was looking at this, the candle was much bigger. It had been almost full green to about the 92 cent line. So I think I bought it at 92 cents. I got home from work at about 11 o'clock. So 11 p.m. here. And this thing is down. It's down 4 consecutive candles from where I bought. The hell is going on? I look at my chart, and the elephant in the room smacked me in the face with its trunk, and I said, ah, shit. I did not draw the retracement properly. So I don't know why I started here. It seemed like it was just a weird big green candle. It seemed like a good spot. Not the start of the uptrend. The start of the uptrend, trading sideways, trading sideways, trading sideways. What I typically look for is high volume to start the uptrend. So I want to say the uptrend started here. Now what that does is that changes the retracement levels. So at 11 p.m. I am looking here, and it's below 50%, but it's still going down, and it hasn't made any type of trigger. Hasn't made any type of I'll get into it a little bit later what I mean by a trigger, but it hasn't made any type of trigger. And gets to 1 a.m. and it's about bedtime for me. I work 3 to 11. I get home about 1 a.m. I'm about to go to bed. So I said, you know what? I'm going to double down on this. I'm going to try to average myself down and double down. I put a buy order in at 79 cents. So 5 a.m. rolls around, and very similar to the hammer that hit this line, now there's one that hits the 61.8%, and then the next candle goes up and engulfs it. This is a bullish engulfing. The body of the next candle is a bullish buy candle, larger than the body of the previous candle. So this is a bullish engulfing pattern. That's a pattern that, in the right circumstance, is a great pattern to buy. I was asleep when it happened. I mean, it's 5 a.m. here, 6 a.m. I wake up at 9:30, and we are up to $1.05. Now, I will tell you I did not sell there. And it wasn't really a mistake. It was, how the market plays out. Sometimes you just get a bad beat. But go back to the Fibonacci. We're going to go with the trend base extension. So we're going to draw the same line from the same trends. Instead of going all the way across, I'm just going to go to the hot top here, because we're going to draw it there, and then we're going to come back down to the bottom of where the trend ended, the downtrend ended, the retracement ended, excuse me. And then we're going to zoom down the chart, zoom in a little bit, and I'm looking to take profits between $1.20 and $1.32. Those are ideally, if everything goes great and these green candles keep moving up. 146 is the ultimate goal, but 120 I'd be happy with. 132 be very happy with. It's big takes for potentially 8 hours into the trade or 10 hours into the trade. They take 30 to 40% profits. It's huge. So it comes in here, and I didn't mean to show this whole thing yet. I see here we top out at 108, drops down, starts to just kind of trade sideways for a little bit, not much volume. It's close to 108 again, 107.6, 107.8, drops back down. Now I'm thinking, okay, we're in a bull pennant. We are in a good, let me draw a trend line here to show you. We're in a good spot. So I'm going to draw a trend line from this top, pretty much across here. And at the time that I stopped looking at it was 10 a.m. this morning. So 10 a.m. on the 18th. Draw another trend line. We'll go from the low here. So I'm thinking somewhere around 4 p.m., somewhere around 4 p.m. it was going to break. We were going to break through the top. A sign that I look for, we're hitting resistance here. 108 is hitting a resistance. Hits it once, hits it twice, hits it 3 times. But each time it hits it, the volume down, or the sell pressure, is less. It sells this much, comes back up, hits it, sells this much, trades sideways, comes back up, hits it. However, that pattern broke. It broke down out of that. I ended up hitting a stop loss at 95 cents. So I bought initially at 93, averaged down, buying more at 79, and it ended up selling at 95. Now, my stop loss in that sense wasn't really a stop loss because I still had profit. I made profit. It was a stop loss. It was how low I was willing to go while staying in this trade and taking any more time. Look, it just crossed back up to $1, and it might hit 108, it might break it. At this point, it had dropped low enough to where I was done. I was out of time with this trade. I wanted to get out and put my money into something else that was more promising at that time. And it could be a mistake to have gotten out. The chart will show in a couple of days, and I'll come back and I'll make a quick update on this video. But I was ready to get out. This part was, the assessment wasn't wrong. It looked bullish still, coming up into this ascending triangle. It broke down. Now what happened here as well is that Bitcoin broke down. As Bitcoin goes, a lot of times everything goes. So Bitcoin could swing back, and this goes back up and hits the 120 or 132 up around here, and I sold out too early. I don't like having my money tied up going sideways. That's just me. Some people would hold on to this for 5 days and see what it does. That's not my trading style. A couple of things, again, to recap on this video. Just a quick recap before I wrap this up. Do not make the mistake of rushing when you're looking for a pattern. You're looking for a retracement. You're looking for something. Don't rush, and don't make it a self-fulfilling prophecy. Don't start it here and go to the top and look. Okay, the current candle. Well, if it starts here, this is the perfect spot. Oh, it doesn't start there. It didn't start here. The pattern didn't start here. This was not the perfect spot. And I lost a lot of profit for this. Be diligent in your charting. Be diligent in your starts and stops. Now, this pattern traded sideways for a long time, and there was some up, and some people will say, well, you should have started here because it was going up here. This was still low volume. This was still low volume trading sideways. Look, if someone wants to correct me on that, feel free. I could be wrong. But this is the way that I see it with looking at a Fibonacci retracement. So Fibonacci retracement, you're looking, for me, I'm looking at levels to hit 50% or 61.8%. Those are the two biggest levels I'm looking on a Fibonacci retracement. 50% and bounce off, or 61% and bounce off. But I likely wouldn't have bought at 50% here. I would have waited it out a little bit longer. I really like buying 61.8. I'll go to buy at 61.8 and I'll set a stop loss at 75%. I might not go all the way down to 78.6, maybe 75. I probably would have set a stop loss at 70 cents. Yeah. Bought at 79, set a stop loss at 70 cents if it were to continue to go down. If it falls below the 61.8 for multiple candles consecutively, it's likely going to stay under that, and it's going to reverse. It is no longer going to be an uptrend. It is not a retracement anymore. At this point, it is a trend reversal, and you're now in a downtrend. Nothing is guaranteed. Nothing is 100%. It could go below 61.8 and bounce back up. It can happen. But typically, playing the averages, if it goes below and stays below 61.8 for any number of candles, it is now in a downtrend. So guys, thanks for checking out the video. I'm going to try to keep it short, sweet, to the point. I hope you learned something here. I hope if you're new to trading or you want to get into trading, you take one lesson from this. It's, do not make the mistake of starting your retracements in the wrong spot. It can cost you lots of money. And stick to your guns. Do what you want to do. I did not want to hold this out to see how far this went before it would go up. I still think it'll break up, but I'm not willing to hold this out any longer. I sold at a profit, less than what I wanted, but it was still a profit, still a profitable sell. And I've got liquidity to jump into something else, and I'll make another video about what I jump into. Till next time, guys, peace.